Hello, welcome back. So now we are going to study objectives of accounting. Why do we need accounting? Okay, why as a subject accounting is needed. So, objectives of accounting as an information system, the basic objectives of accounting is to provide useful information to the interested groups of users. Now, who are these users? These could be within the organization or outsiders. So, both external and internal. The necessary information, particularly in case of external users, is provided in form of financial statements like profit and loss account, balance sheet. Now, what is profit and loss? What is balance sheet? That you are going to study in your 11th standard. In fact, that will be your final topic, how to make a profit and loss account, how to make a balance sheet. We will be studying that. So, the management is provided with additional information from time to time from the accounting records of business. Thus, the primary objective of accounting includes the following. So, let's understand the objective. The very first objective, is of accounting is to maintenance of records of business transactions. So, whatever transactions which relate to business only, personal transactions are not recorded here. Only business related transactions are recorded. So, accounting is used for maintenance of a systematic record of all financial transactions in the books of accounts. Even the most brilliant executive or manager cannot accurately remember the numerous amount of varied transactions such as purchases, sales, receipts, payments, etc. that takes place in business every day. Hence, a proper and complete record of all business transactions are kept regularly. Moreover, the recorded information enables verifiability and act as evidence. So, whatever is recorded can be used as an evidence if we want to check them in future, whether we started this, that we cannot keep every transaction in our head. It is not practically possible, and that is the reason why accounting is needed. So, it becomes our first objective, maintenance of records of business transactions. Second objective is calculation of profit and loss. This is our second objective. So, as a businessman, I would always want to know whether the business which I am doing is making profit or it's making losses. Okay, should I continue with the business or not? So, this is the second objective, calculation of profit and loss. The owners of businesses are keen to have an idea about the net results of their business operations periodically, whether the business has earned profits or not or incurred losses. So, thus, another objective of accounting is to ascertain the profit earned or loss sustained by business during an accounting period, which can be easily worked out with the help of record of incomes and expenses relating to business by preparing a profit and loss account for the period. So, as we are recording each and every transaction, okay, the first objective was maintenance of systematic records. So, we are keeping a record of all the transactions. We will just segregate the records. We will keep all our incomes one side, we will keep our expenses one side. We will see if there are more income and less expense, we will be making a profit. If there are less incomes and more expense, obviously there will be losses. Okay, and this is how we will be calculating. We will be making a profit or loss account to know this. Profit represents excess of revenue over expenses. So, more revenue or income and less expenses. If the total revenue of a given period is rupees 6 lakhs and total expenses are just 5 lakh 40,000. So, more income, less expense. So, the profit will be of rupees 60,000. How? 6 lakh less 5 lakh 40,000. If, however, the total expenses exceed the total revenue, more expense, less revenue, then the difference reflects the loss which we have incurred. Next objective is the third objective, depiction of financial positions. The first was on maintenance of records, second was calculation of profit or loss, third is depiction of financial. Where does my business stand after 10 years of working? What is my market share? Okay, am I doing good or bad? Should I am earning profit, but is it okay to earn this much profit, or my competitors are earning more. What is this? This is the financial position of a business. So accounting also aims to ascertaining the financial position of the businesses concerned in the form of its assets and liabilities. So here we studied about profit and loss. Next thing is assets and liabilities. These are the things which come into picture. So if I own a phone, like if I'm a business, my business has the land, business has machinery, factory, okay, business has cash within. All these things are its assets. What are liabilities? Liabilities are, Sardar. What are liabilities? Liabilities, headaches. Why? Because the business owes this money to someone. Business has to pay this money. It could be bank, it could be the people from whom we bought some goods on credit. We did not pay any cash. Okay, we told them, we will give you in future, don't worry, don't worry. So business has to pay them back, and that's the headache of the business. These are the liabilities, and that's what will show the financial position, okay, at the end of every accounting period. What is accounting period? Now, generally, in our calendar year starts from 1st of January and it ends on 31st of December. We celebrate New Year on 31st night but accounts in India are differently made. They are not from 1st January to 31st December. They start from 1st of April and ends on 12 months, ends on 31st March. So April to March it becomes 12 months. So accounting period is from 1st April to 31st March. 31st March, next day is April. Next year is starting. There is a discussion whether in the government that's going on, whether to make financial year and calendar year the same, whether to make accounting also from 1st January to 31st December. Let's see whether it happens or not. So a proper record of resources owned by business organization. Okay, so what are assets? Assets are the resources owned by business organization. Cash is the resource, land is a resource, investment, gold is a resource. Okay, and claims against the headaches I told you, claims against such resources are liabilities. Okay, the payment that the business has to make facilitates the preparation of statement known as balance sheet, and this balance sheet will show the position, financial position. Next, the fourth objective. Okay, first, maintenance of systematic records. Second was calculation of profit and loss. Third was depicting financial position, and the fourth one is providing accounting information to its user. Whosoever wants, okay, is the user providing information to that person. So the accounting information generated by the accounting process is communicated in the form of reports, statements, graphs and charts to the users who need it in different decision situations. As already stated, there are two main users group. That's internal users, who are mainly management. Internal users are management who need timely information on cost of sales. So if I want to make sales at 120, I need to know whether the cost is 100. What if the cost is 150 and I'm selling it at 120? Okay, I need this information to find out cost of sales or profitability, or for planning or controlling and decision making. Who are external users, and external users who have limited authority, ability and resource to obtain necessary information and have to rely on financial statements. And who are external? The banks are external. Banks cannot just come and prepare our accounts. It's we who will give our accounts to bank. Okay, you can check this. Okay. Primarily, the external users are interested in the following. So, where are the external users interested? Investors and potential investors, information on the risk and return on investment. So, if I want to invest, somebody asks me, ki, boss, please give me money. Okay, I'll give you this much return. First, I'll ask him, ki, show me your accounts. I want to know whether you're doing good or not. If you're doing bad, I will not give you money. Okay, you might run away with my money. So, investors and potential investors need financial statement. Then, unions, labor unions and employee group, they need information on the stability, profitability and distribution of wealth within the business. So, the union employee union need to know whether the business is sustainable or not. It should not happen that one fine day the management will come, okay, we don't have any money, bye bye, tata. This should not happen. So even they are interested in the financial accounts, financial statements of the business. Then lenders and financial institutions like banks and all, they are interested whether their investment is secured or not. So information on the credit worthiness of the company and its ability to repay loans and pay interest. Now, suppliers and creditors who are giving you goods, giving the company goods on credit without any cash, so they would need to know whether the company will be in a position to repay them back or not. So, suppliers and creditors, information on whether amounts owed will be repaid when due and on the continued existence of the business. Then customer, they want to see the financial statement. Why the customer needs to see the financial statement? Because information on the continued existence of the business and thus the probability of continued supply of products, parts and after sales service. So I want to know whether as a customer I am buying a product, whether you will exist in future or not, so that I can be assured whether I will get after sales service, I can get the spare parts from you or not. Okay. So will you buy a car which of the company who is about to shut down? No, obviously not, because all these problems will happen. Next is government. Why government is interested? Because they need to know whether you are paying the right amount of taxes or not. So government and other regulators, information on the allocation of resources and the compliance of regulation. Okay, I'll just put an underline of all those. All these people are interested. You just need to remember their names. Okay, that's it. Social responsibility groups, such as environmental groups, they need to know information on the impact of environment and its protection. Next, competitors also would want to see your financial statement. Why? Because information on the relative strength and weaknesses of their competition and for comparative and benchmarking purpose, whether as a competitor I would want to know whether my competitors how well they are doing their work. So whereas the above categories of users share in the wealth of the company, competitors require the information only for strategic purposes. Okay. Now, role of accounting we will be starting in our next video. Thank you so much.